Good morning. I'm Joe Brusuela, Senior Economist at Bloomberg LP, with your Bloomberg Economic Brief Morning Cup of Joe. Okay, so equity markets in the United States look to open up down roughly 0.5%, and this is directly linked to the announcement late yesterday afternoon of a $2 billion loss due to a failed economic hedging strategy at J.P. Morgan. Now, this is going to overshadow the U.S. economic reports this morning, but we're going to turn to discuss those, and then we'll let you guys get back to monitoring events in global financial asset markets. Okay, this morning we're going to get that April Producer Price Index. Now, declining food, energy, and natural gas prices are likely to offset the increase in gasoline costs, which will present some downside risk in the headline Producer Price Index. Now, excluding food and energy prices, we're likely to see an increase of 0.2% on the back of an increase in light vehicle prices. Now, light vehicle prices have been somewhat volatile recently. This is due to the increase in demand for autos that we've seen, which is now a sustained increase, and it would not be surprising to see that continue in the month of April. Now, I think what's more important here beyond the headline is what's going on in the pipeline or an intermediate cost. Now, we've seen slower growth both in the United States and globally, and the deceleration of growth is ease concerns of producers with respect to higher pipeline prices. Now, on a year-over-year basis, both headline and core intermediate prices have eased noticeably, and that's despite the higher oil and gasoline prices that we've observed over the past several months. Now, while the slowdown in growth is not encouraging, reduced intermediate costs will ease concerns over thinning profit margins for firms, and that's a good sign going forward for corporate balance sheets. Now, at 9:55 a.m. this morning, we're going to see the University of Michigan's consumer confidence. It's the preliminary estimate for the month of May. Now, a soft labor market and the volatility in equity prices that we've observed over the past couple of weeks will likely present some downside risk on the Bloomberg consensus forecast of a 76 print in the University of Michigan's consumer sentiment. I think the important thing here is that when we take a look at what's going on in the Bloomberg Consumer Comfort Index, you can clearly see that slower job gains, the elevated level of gasoline prices, they're still up almost 20% year over year, and of course slower overall economic activity is beginning to weigh a little bit on the household sector, and it's not a surprise that consumers have lost a little bit of confidence here over the past couple months. And that Bloomberg Consumer Confidence index report yesterday, you can see that we've seen a reversal of roughly one-half of the gains that we've observed here in 2012. I'm Joe Brusuelas. This has been your Bloomberg Economic Brief Morning Cup of Joe.